guys, how are you all doing? So I hope you all are doing fine. So let's jump into the next chapter in our order block strategy. Okay, now by now you already know, so the basics, what is an order block, how to refine an order block, all of the things that I already taught in previous video. Like if you don't know how to refine order block, what is an efficiency and imbalance, solidified lows and highs, and the discounted and premium pricing. So you go back to those video and come back here again for the today's video, which is a breakup structure. So what we should consider a breakup structure and what we shouldn't. Okay, so without further ado, let's jump into it. Okay, all right, we're going to talk about what is BOS, time and price relation, and which one BOS you should prefer, which one I prefer, and you decide out of the three types which one you're going to prefer, right? So the breakup structure is, once you mark the solidified lows and highs, any break of those lows or highs are called a breakup structure, right? Now there are three types of BOS. Okay, so what you should consider is type 1 is I call this as the body breaks wick. So once you mark the solidified lows, highs and low, so this is a wick which is broken by this body of the candle, and this is the most preferred one, which I prefer, because it's more I can say it's more probable than the other two, but you can use whatever you want, so whichever you suits. So the first one is body breaks wicks, and this is an example for Australia dollar US dollar chart. It's clear cut order block here. When the price, just set an alert when the price come here, then react. Okay, the type 2 is the body breaks body. The candle body is broken by the candle body. So we will not consider a breakup structure unless body breaks body. So this is another type. It works out as well. It's fairly good. I don't use it, but this is for educational purpose. You can use it if you want. Try it out, backtest it out, and then you will get to know what is I'm talking about. Okay, see, this is a breakup structure, and this is clear cut order block here, which move to the north, move to the upside, right? And the third and last is, which is kind of weird one. I don't use it, but it's there. So wick breaks wicks. The candle wick is broken by the candle wick. So this is less probable because, see, I find it is less probable because I don't ship the time frame too oftenly. So I use this magical time frame which everyone uses. So I will talk about it. What is it? So, but for now, it's just three types. One, body breaks wick, which is I use, which is more desirable. Other one is a body breaks body, is also not too bad. But I would suggest let's not use this, okay? But just have a study purpose, so you know what are the three types, right? Now, the time and price relation. So you need to understand that, so the time doesn't know the price, and the price doesn't know the time. These are two different dimensions. Okay, so there is what I'm trying to say, there is no magical time frame like 15 minutes, 13 minutes, 45 minutes, 10 minutes. No. So whichever the chart, whichever you feels like more comfortable or more readable rather than comfortable, you can use that. So why I prefer the first type, which is a wick broken by body, BOS, because I use these magical time frames. I generally do not shift too often, like 10 minutes, 20 minutes, to just see around which the picture is more clear around which time frame. But there is a no magical time frame, right? So if you use that first type, BOS, this one, so you will more likely to use this magical time frame, and it will work out for you, because you don't often switches the time frame to see the more clear picture. Obviously, you can switch it if you don't have, if you are in the doubt, or you don't have the clearer picture on the 15 minute, or let's say 30 minutes, so you can go to 20 minutes and check it out, okay, how it is readable to you or not. So that's the point. So just remember, there is no magical time frame, and time and price are two different dimensions, right? And what one you should prefer. So you can try it out, back test it out for all of the three types, and see which one is work for you. So this is it for today's video, but remember, next video is going to be my 2 rules for entry criteria, or two rules to confirm the change of trend, which is going to be more important in order to enter how you can enter using those 2 rules on the lower time frame. So what we're trying to do here is, we know the trend is bearish on daily, or let's say on the hourly, and we're trying to do enter on 30 seconds. So those 2 rules are very important. So just keep up to date on the page, and if you haven't subscribed yet, please subscribe it.